ledger. Take a look at arts and things. Date. Here, notice it says item, post reference, debit and credit, but this is where it changes. We only have one column for the balance. And take a look at your account title. You will find in your subsidiary ledger or in any ledger, if it got full and you had to open up a new page or get a new document for it, that's going to be where you'd have something in the item column written where you'd write the word balance. The other time that we would write in our subsidiary ledger is going to be if we have an account that is written off. And we're not going to get to that in accounting 1, but the concept is we have Alex. Alex is a customer. He comes into us. He charges on an account for $500. We try to get Alex to pay. Alex doesn't pay. Eventually, we need to get that money off of our books. So then we would go in and we'd actually write it off. So then we would have to go through and actually transfer it out of a customer account into an expense, and it would become an expense for our business. So that would be another time that we'd be writing in our item column. But typically right now when we look at it, we would only do that if we have to open up a new ledger page for someone and write the word balance in. Otherwise, we're going to be taking our post-reference. Another new thing that we have for post-reference for this chapter is we have multiple journals. Before, we could just do 13, 17 for the page number that we're posting from. But now we have to include the letter of our journal. So if I'm posting from a sales journal, it would be S and the page of my sales journal. If I'm posting from my cash payments journal, I can't use C because C could stand for a check. It could stand for cash. So I'm going to have to use CP for cash payments. What if I'm using cash receipts journal? CR. Purchases journal? P, general. J, or G, excuse me, wrong letter. So G and then the page number. So we always need to do that. The other thing you're going to find is some journals, you're going to use more than one page per month. For example, a business tends to pay out a lot of money, so they may go through more than one cash payments journal throughout the month. So your cash payments journal, if you're in September, won't be page 9. It might be page 14. But your sales journal is probably going to be on 9 because January would be page 1 and so forth. So don't expect all of your page numbers to be similar between your journals. One of the things that we have to do, though, is all the time we need to know that at the beginning, for every month, you always start a new journal because it's important for a business to know how much money it generated in revenue and customers and data monthly. So we always have to make sure every month that we total them up. Except you're going to find we are not going to total improve our general journal because we're not posting anything as a total. You're just going to make sure you have your debits and credits for each transaction listed correctly. Anytime we do posting, there's always got to be a way that we can go through and prove what we've done is correct. Because it's easy for us to make a mistake taking information from our journal and putting it in our ledger. So to prove that, at the very end, after we've done posting, we would prepare a schedule of accounts payable or a schedule of accounts receivable. And this is where it gets a little tricky because we always know when we do accounting, we know if we've done our work right because we can prove it. And how are we going to prove this? Well, we have an account called accounts receivable. And I have an account called accounts payable. And I have a ledger called accounts receivable and a ledger called accounts payable. I have to take the total of my ledger, accounts receivable, and it needs to equal my account, accounts receivable. If it doesn't, somewhere, somehow, I've made a mistake. The most common mistake that I have found is students forget to do postings to the actual account, accounts receivable. They do well enter a subsidiary ledger, but they forget that big controlling account. So giving you that as a heads up. When you prepare a schedule of accounts receivable or payable, it's going to look like this. And when we look at this actual form, 3 lines in the top, name of the business, name of the document, and the date. And then right here, we'd write our accounts, and there's only one column here for numbers. I don't have to worry about debits and credits, because if I'm doing a schedule of accounts receivable, all of them are going to have a debit balance. If I do a schedule of accounts payable, they would only have a credit balance. So I would just go through and total and prove. We do need to indicate this notes listed here in Applia. It says type a 0 in the balance column to indicate a 0 balance, and type a check in the post-reference column to indicate a check mark. So our instructions for Work Together 11-1 reads that we have a partial purchases, cash payments, and general journal for graphics inked given below. Also are given our accounts payable forms for selected accounts and a blank form for a schedule of accounts payable. I'm going to guide you to the following examples. So because they only gave us a purchases and a cash payments journal and a general journal, we're only working right now with our accounts payable ledger. We're not doing accounts receivable. We're going to break that into a separate section. So what we have there, our first instructions, it says start a new page for accounts payable ledger account for Regal Design. The account number is 240 and the balance on October 1st of the current year is $877. So what I need to do is right here in my ledger, I need to find Regal Design. I need to fill out the new ledger form for it, so I'm going to put the name of the vendor on top, which is Regal Designs. My account number for Regal Designs is 240. And then you can go ahead and go to October 1st is the balance. And then I do need to put the word balance in there because they said that's where it comes from. And all I need to do for my balance is just go ahead and put in $877. So that is how you start a new page for an accounts payable account. My next instruction for Work Together 11-1 reads, post the accounts payable credit entry on line 7 of the purchases journal. So what is important here is they told us which journal to go to first. So I'm going to go to my purchases journal. And when I look at my purchases journal, the purchases journal is one of the easiest journals that we have to record onto because there's only one column here for numbers. But this is what you need to realize. You need to read this line right here. It does not say account. It really says accounts credited. And what they have here is Regal Designs. So they're saying Regal Designs needs to be credited for $1,403.20. So I am now going to go find Regal Designs, which is already open on the bottom, put the date of the 19th in there. My post reference is going to be P and 10 because I'm going from my purchases journal, page 10, and I am crediting it $1,403.20. It already has a balance, though. It has a balance of $877. So using my calculator, I will take $877 plus $1,403.20. So it should give me, if I did my math correctly, $2,280.20. Because it's a credit balance and I'm crediting it individually, I have to add the two together. Anytime that you are posting from your purchases journal, you are always going to be increasing your subsidiary ledger. But we are not done. Remember, one of the things I've said to you all along from your posting is the procedure of how you post is as important as getting it done. We always move left to right. The last thing that we always do is take this vendor number 240 and it goes back up on top onto my purchases journal to say, hey, I posted this amount into account number 240. Yes.